Good evening, everybody, and welcome to one more edition of LM's Latin Manalal's the weekly wrap, the week that was. And I think this week was a very action-packed week. We had a lot of positive movements in the market. The global markets have reacted positively to all the developments following the FOMC meet. The domestic markets have performed exceptionally well. So I have with me Mr. Jash, who is the Senior Investment Research Analyst at LM Securities. He will brief us about the market developments, and I will then be covering the sector related developments. So I hand over to Mr. Jash.
Good evening, everyone. It's very nice to see you all this week again. And with me, I've got a brief on how the week was in the domestic as well as the global markets. Last week, I said we should be cautious because of the Fed meet. And the first 2 days, that was Monday and Tuesday, the markets were pretty boring and it was going on the downside. But as we moved on Wednesday, I think the market had already discounted in the 75 basis points hike. But if there was going to be 100 points, that was going to be a slight sense of worry. But the Fed made investors across very happy by 75 basis points hike. And after Wednesday, we see the markets have really picked up. The collective increase of the index is 2.5%. It is at 17,150. But the major upside we saw was on Wednesday, Thursday, Friday. It was also backed by purchasing of institutions and very strong results from the domestic companies. The consumption theme, as I pointed out last week, that it was higher by 8%, which is clearly being seen on the results of on the likes of Devyani International, Westlab Development. So Domino's, McDonald's, all of that is really good set of numbers. Also, I think there's one negative news that was there was Europe. The Europe inflation was much higher than expected. It is at 8.9%. And out of those, even 10 countries in Europe is in double digits. Some of them are Greece, Netherlands, Slovakia, and 7 more of them. They're expected in June it was at 8.6 and it has increased by 30 basis points, which is a sign of worry. I think that sums up what I had to say about the global markets and the domestic markets. I think Mr. Nirav has more to add on to the global markets.
Yes. So as explained by Jash, the one of the important questions which one of the important dilemmas which is being faced by the lot of investing community is whether US is in recession or whether there is an inflationary scenario, whether the economy is doing well or whether the economy is doing badly. Now there are different conflicting signals which are coming out of US. One is the dollar continues to strengthen against all the other currencies vis-a-vis all the other currencies of the world. The employment data is very strong. They have very strong employment data which is coming out from this. So the data is giving conflicting signals. According to some experts, the world is going through a phase of recession which is going to be divided into two parts. The first part is the supply-led recession. The supply-led recession, which was caused by the supply chain constraints, which we saw because of COVID and all the war.
That was early last year.
Yes. And that has caused an inflation. Now, because of that inflation and all the problems which accompany that, there has been a lot of stimulus which has been granted by governments. So a lot of money was infused into the system.
I think the latest one was in the last month, if I'm not wrong.
Yes. So that money, that liquidity now needs to be pulled out because it is creating bubbles across different asset classes.
Yes.
So when you pull that money out from the system, you have it is followed by what we call as the demand-led recession. And that demand-led recession essentially destroys asset values. So, in a nutshell, if I were to say, the supply-led recession that kind of kills the demand, and the demand-led recession is that kills the asset values. Now, this is the view which is being given by a lot of experts, but and the view which is coming from the experts is that we are still in the first phase of recession. So this all dilemma is being faced at the global level. This is one factor. Apart from that, we are seeing that in Europe we are on the brink of a full-fledged recession. Because the economic activity has slowed down substantially on account of the heat wave over there. One factor is the heat wave, and the second is the demographic profile is unfavorable for the European Union countries. And now the unsustainable energy prices. The energy prices are just too high to substantiate, and it is essentially killing the demand over there. Luckily for India, I think coming to India, we are immune from all these developments. We are kind of insulated from all these developments. And as Jash rightly pointed out, we are seeing a consumption boom which is there in the country. Now, a few things are working out, which are working out well for India, is that on the stock market front, we have seen this month, the month of July, there's been a significant fall, or there's been a slowdown in the selling by the FIIs. They've been selling they've been on a virtual selling spree, and that has kind of ebbed quite a lot. In fact, last week we saw that FIIs were net buyers in 4 out of the 5 sessions in the market. So we've seen that there's been a substantial slowdown in the selling. That is one factor. Second is because of the rupee being close to 80, dollar being close to 80 rupees. There is a good opportunity for the FIIs to convert money at this point in time, bring it into the Indian markets. Valuations are also attractive, and at the same time the currency is also giving a positive headwinds. So I think the FIIs would like to take advantage of this. They would like to now cut down on the selling or slow down the process of selling. Secondly, they would like to convert dollars into rupees and make investments into the markets, because valuations are also looking quite appealing at the moment.
To add to that, I think yesterday and day before yesterday, there was a lot of short covering we saw from
we have seen that is exactly the result.
We have seen good short covering.
Yes.
I think that can turn into long bets also in the coming week.
Yes.
I feel we are very attractively placed as in terms of investment.
We are attractively placed at the moment, but global cues will also play an important role, and we should not forget one thing, that crude oil continues to be the joker in the pack. So
I agree.
at $107, I think crude oil is definitely going to be one factor to watch out for. Finally, in our section which we are coming to the results, I think we had a lot of results.
We had a very busy week.
And to start off with, I think from the auto sector, the market has kind of ignored a lot of results which were declared by the companies. It has given a kind of an indifferent approach to the results, but there are certain results where the markets has given a tremendous thumbs up. So those results I'd like to point out, all those results where the markets have given a thumbs up. One is HUL, Hindustan Unilever Limited. Second is Nestle.
Correct.
Third is Asian Paints, where we had a stellar set of numbers. Fourth is Titan Industries. All these are incidentally consumption themes which are playing out very well.
That's exactly what we pointed out.
Yes.
We have a consumption boom
that
is going on.
Yesterday, in fact, in the mid-cap space, we saw results from Jubilant Foodworks, which are very, very strong results, very encouraging results. And Westlife Development, which is the McDonald's franchisee, very strong set of numbers. And today we are seeing the reflection of that in the market. We are seeing all stocks, whether it is Devyani International, or whether it is a Barbecue Nation, or whether it is a specialty restaurants. All these stocks were virtually on fire, because the consumption theme has played out really very well. we saw a strong comeback from the banking space. In the banking space, we've seen Bajaj Finance, Bajaj Finserv, virtually they were on fire during the week. We saw IndusInd Bank perform exceptionally well.
I think even DMart has been doing very well since the last 2 days.
DMart has also been doing well because, again, it's a consumption
story.
If one were to extrapolate the consumption story further, then I think Kajaria Ceramics and all these stocks, they have also been ceramic stocks, etc. These are also consumption themes.
I think, sir, like we rightly pointed out last week, that the consumption theme, India's demographic profile is very attractive right now for the world.
Yes.
So we are looking at a very good scenario in the next coming few years, and I think this is the right time to take a call on that. And the numbers are showing it's an early sentiment booster. That's what I would say.
Very true. And finally, I think one area which we will want to cover is the metal space.
Yes.
In the metal space, we have seen a lot of commentary. We've seen a comeback in the metal space. Post the Tata Steel split, the stock split which occurred yesterday.
Correct.
I think the stock has started performing very well. It's up for the second consecutive day. And we are seeing commentary from all these steel companies. Most of the steel companies have given a view, metal companies have given a view that they expect things to stabilize from October onwards. Till now, most of these companies have been using high cost inventory as the raw materials, so the margins have been under pressure. The exports are restricted because of the duties which have been imposed. At the same time, the actual buyers are in a wait and watch mode. There's been a lot of destocking which has taken place, and the restocking is not taking place because they are expecting the prices to correct further. So I think all these things are likely to get ironed out by October. The steel companies expect that the raw material prices will stabilize by then, the demand will stabilize by then, the exports will be restored by then. So a lot of things which are adding to the volatility in the overall environment, and I think this is virtually across the board. To cut the long story short, we can expect a lot of things to improve. But corporates are essentially in a wait and watch mode because they want to see whether the raw material prices are stabilizing, whether the demand is stabilizing, how the demand is going to make a comeback, and overall how their margins and the volumes tend to improve. So I think
I think it's a wait and watch
broad
for
story.
Now. But in the longer term, we can always take good positions.
Yes.
I think Indian markets are very, very attractive right now, and we have been seeing that.
Finally, thematic would work. One is consumption.
Correct. Yes.
Second is railway-based stocks because government is giving a lot of thrust to the railways.
Correct. Yes.
Third, government is giving a lot of thrust to defense, Atmanirbhar. So these are some
commercial
of the
vehicles also look very
and
good.
we could have a separate program for these three themes, a
Definitely.
short coverage of all these three themes. So I think with that we wrap up our session for this week. Next week promises to be a very action-packed week. We have the auto sales numbers, we have the RBI Monetary Policy Committee meeting. So hopefully we'll have a lot of inputs and insights to share in our next meeting. Do revert back to us with your feedback, and thank you for a very patient hearing.
Thank you so much.
You.